Some cars can feel like a dream when you first drive them off the lot, and some vehicles historically make you feel like a king on the highway. There are all kinds of cars out there, but the question is, which models are actually worth the long-term financial commitment, and which ones turn into a total nightmare, especially if you finance them for a long 7 years. According to recent automotive financial studies, which analyzed millions of active car loans to determine which models best demonstrate high rates of owner regret, high depreciation, and severe reliability issues before the loan is even paid off, these 10 vehicles came up on top as the absolute worst financial traps. And heading into the current market, these money pits are proving to be the exact cars that Americans regret financing for 84 months. Before we begin, if you are new to the channel, please consider subscribing for more content like this. Now, let's go from number 10 to the absolute worst at number 1. Number 10. Dodge Journey. The Dodge Journey might look like an affordable family SUV on paper, but it is a vehicle that has very little to offer in the long run. From its outdated interior to its notoriously sluggish performance, it makes way too many compromises. This crossover was built on ancient platform technology, with a massive percentage of owners expressing deep regret just 2 or 3 years into their 7-year finance term. The Dodge Journey suffers from rapid depreciation, meaning you will owe far more on the loan than the car is actually worth almost immediately. RepairPal reports that the average total annual cost for repairs on a Journey rises drastically as the miles accumulate. Dodge Journey owners frequently find themselves paying for transmission repairs and electrical issues while still making high monthly payments on an 84-month loan. It is a financial trap that keeps you underwater for years. Number 9. Nissan Sentra. The Nissan Sentra is a compact sedan that attracts buyers with its low starting price and sleek styling. However, financing this vehicle for 7 years is a decision that many Americans deeply regret. A major percentage of Sentra models from recent years have faced severe issues with their continuously variable transmissions. When your transmission fails at year 4 of a 7-year loan, you are left with a massive repair bill on top of your monthly car payment. This sedan does not hold its value well at all, and by the time you reach the midpoint of your 84-month financing term, the car is worth only a fraction of your remaining balance. With mixed reliability ratings and high rates of early trade-in regret, the Sentra is a prime example of why long-term financing on budget compact cars is a major financial risk. Number 8. Jeep Compass. The Jeep Compass promises the rugged appeal of the Jeep brand in a compact, affordable package. But behind the styling lies an SUV with a track record of early wear and mechanical headaches. According to owner satisfaction surveys, a very high percentage of Compass buyers regret their purchase within the first few years. When you finance a Compass for 7 years, you are almost guaranteed to outlive the manufacturer warranty while still owing thousands of dollars. The interior materials wear down quickly, and the engine performance is often described as noisy and unrefined. Owners regularly report suspension issues and electrical glitches that require expensive, unscheduled shop visits. Paying for a depreciating Jeep Compass for 84 months is a surefire way to lock yourself into a negative equity cycle that is incredibly difficult to escape. Number 7. Chevrolet Spark. The Chevrolet Spark is one of the smallest and cheapest cars sold in America, which makes it highly tempting for buyers looking for a low monthly payment. But stretching a loan on a subcompact car out to 7 years is a massive financial mistake. The Spark is designed as a basic city commuter, and its components are not built to withstand 7 years of heavy daily driving without showing serious wear. By year 5, many of these cars are showing significant cosmetic and mechanical degradation, yet the owner is still locked into payments for another 2 years. The resale value of the Spark drops like a stone, leaving owners completely trapped in their loans. Financing a budget subcompact for 84 months means you will be paying luxury-level interest rates over time for a car that feels worn out long before the final payment. Number 6. Ford EcoSport. The Ford EcoSport is a subcompact SUV that Ford recently discontinued in the American market, which immediately hurt its resale value. Owners who financed this vehicle for 7 years are now finding themselves in a very difficult position. With its cramped interior, underwhelming 3-cylinder engine, and awkward side-opening rear tailgate, the EcoSport failed to impress critics and buyers alike. Those who are locked into long-term loans on this vehicle are watching its value plummet while dealing with engine cooling issues and transmission hesitations. Because the model is no longer in production, finding specific parts can sometimes lead to longer wait times at the repair shop. Number 5. Mitsubishi Mirage. If you are looking for a car that offers basic transportation and great fuel economy, the Mitsubishi Mirage is always a candidate. But financing this 3-cylinder hatchback for 7 years is a recipe for instant regret. The Mirage is built strictly to a low price point, which means cabin noise is extremely high, acceleration is dangerously slow, and the overall ride quality is highly unrefined. While the car comes with a decent powertrain warranty, that warranty does not protect you from the extreme depreciation this vehicle experiences. After just 3 years of ownership, a Mirage is often worth less than half of its original MSRP, while an 84-month loan balance remains incredibly high. Owners quickly realize they are paying a long-term premium for a vehicle that lacks basic modern comfort. Number 4. Chrysler 300. The Chrysler 300 is a large, imposing sedan that offers a comfortable ride and classic American styling. However, this vehicle is built on a platform that has not seen a major structural update in over a decade. Financing a Chrysler 300 for 7 years is a high-risk gamble. The vehicle suffers from steep depreciation as the market continues to shift heavily toward SUVs and trucks. Furthermore, long-term reliability ratings for the Chrysler 300 are below average, with owners reporting frequent suspension wear, engine cooling failures, and dashboard electronics issues. Because parts for this large sedan can be quite expensive, maintenance costs pile up quickly as the vehicle ages. Paying premium sedan monthly payments for 84 months on a car that feels dated and expensive to fix is a major source of financial frustration. Number 3. Land Rover Discovery Sport. Luxury SUVs are some of the most tempting vehicles to finance for long terms because they allow buyers to fit a premium brand into a monthly budget. But the Land Rover Discovery Sport is the absolute king of luxury financial regret. Land Rover models are notorious for rapid depreciation and high repair costs, and the Discovery Sport is no exception. By year 4 of a 7-year loan, the vehicle has typically lost over 60% of its value, yet the owner still owes a massive sum. Unscheduled repairs on a Land Rover are incredibly expensive, with parts and specialized labor costing double or triple what you would pay for a mainstream brand. Financing this vehicle for 84 months means you will likely face thousands of dollars in repair bills while still paying off a massive luxury loan. Number 2. Maserati Ghibli. The Maserati Ghibli promises Italian style, an exotic badge, and a roaring exhaust note. But it is widely considered one of the worst financial decisions a car buyer can make, especially on a 7-year finance plan. The Ghibli suffers from some of the worst depreciation of any vehicle on the market today, often losing up to 70% of its value in just 5 years. Along with that drop in value comes a legendary reputation for electrical gremlins, suspension problems, and frequent engine issues. Because it is an exotic brand, even basic maintenance, like oil changes and brake replacements, cost astronomical amounts. Maserati Ghibli owners who finance for 84 months find themselves paying thousands of dollars a year just to keep a rapidly depreciating, fragile luxury car on the road. Number 1. Ram 1500 Classic. The Ram 1500 Classic is a full-size pickup truck that Stellantis has kept in production alongside the newer generation Ram to offer a lower-priced truck option. While a brand new, full-size truck for a lower price sounds amazing, financing this outdated model for 7 years is a major trap. Because the Classic is based on a truck design from over a decade ago, it lacks the safety features, interior tech, and fuel efficiency of modern pickups. The depreciation on the Classic is incredibly steep because buyers in the used market prefer the newer generation design. Owners who take out 84-month loans on this truck are paying for old technology and high fuel bills while watching their truck lose value faster than almost any other pickup on the market. It is the ultimate example of a vehicle where the long-term cost far outweighs the initial discount. Hope you liked this video. If you haven't done so far, please hit the subscribe button and ring the bell for more informative automobile videos. Thank you for watching.